I'm just going to vanish for just a moment.
Yeah. So we are live. Yes. Here is the link for you all. Zoom.
I'm just going to vanish for just a moment.
There you go. And here is the link in chat window. So in a moment, we will start the 13th episode of Idu Startup Harate. And sweet. Okay. Hello. Welcome to the 13th episode of Idu Startup Harate. Today we have with us Rohini Chakravarthy, who is the partner at NGP Capital. She has an incredible background in investment and technology, spanning over 2 decades. She's been with NGP, and prior to that, she was with NEA and Intel and Cisco Capital, and she's also the co-founder and CEO of the startup Inksedge. So honored to have you, Rohini, on the show. Welcome.
Yeah, thanks for having me.
Great to have you.
My first Konglish show.
The first.
I'm not sure how much Kannada will be there, but we'll see.
Yeah, now we were trying to do a NLP and analysis on our show, and then we found that we are pretty terrible Kannadigas. So, all
good Bangaloreans, yeah.
True Bangaloreans. Yeah. Okay, but while we wait for Mandar, Rohini, where are you from? Are you from Bangalore?
I'm from Bangalore. So I grew up in Jayanagar and went to local schools, Sudarshan Vidya Mandir, Vijay High School, National College.
Yeah.
And then I went to IIT Madras. So I was so
until Vijay High School we were rivals because I went to BHS Tamil. It is always BHS versus Vijay High School. But so great to have you. I'm glad the timing and everything worked out. And then you were like one email and then you said yes. So which is awesome. Thank you.
Yeah, no, I watched the episode with PV Jagdish as well. So very interesting. Happy to be here.
Thank you. So first things first, if I'm not mistaken, Mandar, Rohini is the first woman on the show.
Absolutely. She is the first woman on the show. And as they say in Hindi, there I am. We should have had a woman on the show long ago. And I'm glad we waited till Rohini was available. And yes, absolutely. So and we hope to have more and more women entrepreneurs come and talk to us about various aspects of startups, tell us success stories about their startups. And for that reason, Rohini, this is a very special episode, and we want to thank you once again for appearing here.
Yeah, but one small thing, Mandar is totally lying right now, live on the episode. We didn't wait for you. It was so hard to find a woman for the show.
Well, I guess you haven't looked hard enough. We will see. I put it back on you guys.
But
the problem is this. Even yaru trust madalla re. That is the problem.
But jokes aside, how is the scene about women in entrepreneurship, tech in general? We've known women in entrepreneurship. What's your viewpoint? How's that doing?
Yeah. No, so well, first of all, thank you for having me on the show. And I think, like Kamala Harris says, hopefully I'm not the last here, right? I may be the first somewhere, but maybe hopefully not the last. And I think jokes apart, I would be more than happy to introduce you to sort of my network of investors, entrepreneurs, Actually, at Inksedge, we were an all-woman leadership team, and so there's some excellent leaders in Bangalore still, and some of them are on their next startups. Swati Kulkarni, who was one of my colleagues, she has a new startup now. She also raised capital as part of NUA Women, and so happy to open up my network. And this is obviously one of the things that's super important
That'll be
for
great.
me as well.
Absolutely.
In general, I think, obviously the headlines, everybody has read the headlines on women's entrepreneurship, and that, there is a fair amount of headwind for women kind of trying to raise money and so on. And the last 2 or 3 years, actually, there has been a lot of progress. So I would say, um, especially around Me Too and so on, when people openly called out how sexist some of the environments were. Some were, unconscious bias, and some were openly sexist environments. Um, so I think there has been a lot of progress. And I'm part of All Raise, which is um, or I'm a supporter of All Raise, which is women raising venture funds, and I've been part of that community. And certainly entrepreneurs, there are many more entrepreneurs raising money. This year actually has been quite challenging. I think the Q3 number was, it's a 3-year low of women raising funding. um, it's it dropped about 50% Q2 to Q3. So it's and part of it is actually getting quite well documented, because one of the things that pandemic is doing with schools, especially in the US, right, where schools are not back online, when you have kids at home, both parents trying to work um, from home, something breaks, and it's usually the woman taking a step back, and saying, okay, maybe I should just take a couple of years off my career. And I think that is going to be one of the big challenges. On the other hand, as we have seen, everybody has gotten flexibility. You can work from anywhere. Most people have decided they're not going to go back to work full time
Mhm.
in the office, right? It'll be, remote work or distributed work and that could be a positive. That could be a positive for all sorts of, minorities, let's just say, in the workplace. So I think, my own, I'm cautiously optimistic, right? I think the awareness is super high. We obviously have, especially in India, we have tremendous presence of women in engineering, right? And so at the college level, and the pipeline into the workforce is very high. There are other systemic things, and maybe social things that we still have to kind of figure out. But the awareness is high, and I'm hopeful that it will continue. But role models are important, so please get many more people on your show and continue this discussion.
Absolutely, and thank you for being one yourself. Nano, I've seen there is enough kind of experience and exposure coming in this direction. But quickly, if you want to touch about what are these unconscious bias that you have typically seen? ಈಗ ನಮ್ಗಳು ಗೊತ್ತಿಲ್ದೇನೆ ಇರ್ಬೋದು. For all you know, we might think, having grown up in a society like this,
Yeah.
like Mandar and I have talked about this at length. We don't want to be proud about, uh, oh, we have a woman on the show. Anno badlu. I want, like, one day the hope is that it becomes a little more. Yeah, anno thara. It should be, but today it is not. We want to acknowledge that. But what are some of these unconscious biases according to you?
Yeah, I mean, you should read up. There's a ton, but I think the first one, there's all, at least, especially in India, I think, but maybe here too. It used to be, even a few years ago, people thought women had it easier than men. Like the myth was, oh, girls have it easy. Like ಹುಡುಗಿ ಕೇಳಿದ್ರೆ ಕೊಟ್ಬಿಡ್ತಾರೆ, ಏನ್ ಮಾಡಿದ್ರು, like girls have it easy. I think it's just the opposite, right? I mean, you kind of you have headwinds. So that's the first one, right? Like, the first question of whether, you are valued and whether your ideas are equally meritorious. I think that itself there's a first question around it. The second, which leads into that, is in lots of environments, even in environments where you might get in through your marks or your rank or whatever. There is a strong, so who gets valued, whose ideas have value, have a lot of social hierarchy kind of associated with them, right? And it could be that, okay, somebody is senior and their word has more value than a woman's word, or like even a younger guy's word, right? And so there could be a social hierarchy. And certainly, even if nobody stops you from doing something, they may not give you the same opportunities, or they may not think of you when you say, okay, who would be good for this, and then they may not think of women in equal numbers. There's a lot of research that shows that they don't think of women in equal numbers. I think there's also, like, specifically around venture investments, there's been research. There's actually a researcher at Columbia who did this work where she actually did an NLP analysis, to your earlier point, on what sorts of questions get asked of women entrepreneurs versus male entrepreneurs, right? And male entrepreneurs get asked questions on what could go right. Like, okay, think about this, you're taking a risk, where could this go, how could this how could this become a big company. And women entrepreneurs tend to get asked the question of, okay, what could go wrong, right? So have you checked your numbers, have you done so? Andre, you're focusing the woman's attention, and that's a typical unconscious bias. You're focusing the attention on what could go wrong, or like, let's be more cautious here. So, and this is a risk-taking industry. So, at the margin, if you push somebody towards taking risks and taking balanced risks, that's where success is, right? So even in the outcomes that you see, you will see a difference. And that part of it is actually, it's interesting. Men and women have the same bias. So they did this TechCrunch Disrupt this thing. It wasn't like a woman VC asked. So the women VCs in the room also had the same bias. Even they asked women more caution-oriented questions than they asked men, right? So, and that is a typical unconscious. It's not a man-woman split. It's more about kind of how we've all been socialized.
Right.
And then I think there are lots of numbers you can see. The amount of, so Kaufman Fellows did a big research study late last year or earlier this year, where they showed that the dollars that went into women-led firms per investment, the per deal amount was lower. But actually, it turned out that if you got past the Series A, the seed and Series A, women-led firms had fewer the loss ratio was actually lower, right? They were actually better managed. So there was, so kind of the management of the firm itself was better, partly because it was maybe better tested. There was more financial discipline. But it turned out that the entry gate, right, there was a huge narrowing at the entry gate. So there was much less money per deal, and all of those things. So those are some of the ways it gets, it shows up. And of course, with I'm a venture investor, so the number of VCs is 4%, right? In women VCs is 4%, women partners and general partners, and there's no reason why that should be so, right? And it's there are lots of reasons people give you, saying, oh, the pipeline's not there, women don't go into engineering. I don't think that's true. There are lots and lots of VCs who are not engineers, right? So I think we, at least when you study all the research, there are plenty of good excuses. I don't think there's a good reason why there is this huge split. It is true that I think just last point, I was at that Women in Workplace Summit by Wall Street Journal, and Sheryl Sandberg and the leadin.org, they are co-sponsors. They still, there is if you do the time studies, women do more work at home. There is no question that women, even in the US, they work about 2 to 3 times as much as guys, I think. And that may be an understatement, by the way. So most women feel like they have a job at work and then they have a job at home, right? So I think that for that, I think it's very important that guys take on like a, truly equal share if you want women to be successful. And there's numerous studies that show that women who are successful at work, the biggest factor in their success is having a spouse who's who's support, I guess, family, who's in India it's more family, I would say, like where you have infrastructure to support you.
Got it. Got it.
Right.
No,
So
it's
a family or a spouse who won't merely be supportive and will do half the
Yeah,
work.
they're not just
Uh,
helping you, they're
yeah,
running the
exactly.
household with you. Yeah, it's like it shouldn't be, let me help you run the household. It's like
Exactly, exactly.
you
Well,
have
it's
to,
very
yeah.
it's very disheartening to hear this. Of course, we all knew this, but then when you say it, it kind of makes it very real, right? And kind of makes my heart sink a little. So when you say there is lesser money per deal when women are at the forefront, does that mean that basically lower valuations are offered to them? How does that happen? What exactly? How exactly does that process take place?
um I think there isn't I think these are all I would say that in my experience many of these are unconscious biases. They're not like somebody's not out to get women to say, oh, there's a woman who
Right.
walked in, I'm going to give her half the price because I can. Like I think you don't have egregious, I haven't seen egregious stuff like that. But I think what happens is it starts with the initial question, that it's like, because we are in an industry where we're trying to create something out of nothing, right? So somebody walks in, and they have a plan to create it's a new business idea and so on. And the venture investor is taking a leap of faith. And even in your previous conversations, you've had these conversations about how the match is about, do I want to work with this person? Do I believe that there is a vision here? Do I believe this person can execute, right? And in each of those questions, if you have like slight doubts, like in the venture industry, when in doubt, leave it out, right? You look at 100 companies, and you will invest in one of them, right?
Right.
So there are lots of reasons to leave it out. So if I can't get the confidence that this is a big enough idea, right? Like I convince myself, this is interesting, but it's not a big enough idea, I'm not going to invest in it, right? Man or woman, right? So this market is not big enough, I'm not going to invest in it. And so if women in general get asked more cautionary questions, it's much easier for everybody in the room, not just the men, for everybody in the room, to come to the conclusion that, oh, it's like, it's a good idea, but maybe it's not the most important thing. And that's how it starts. So somebody has to take that leap of faith to invest in this thing. And even when you take that leap of faith, once everybody in the room has gotten into a little bit of a risk aversion mode, you say, okay, one of the ways to reduce your risk is to put little less money into it, and it shows up in how much money you put into it. Like that's a standard venture risk mitigation strategy, right? Where you say, if I don't want to put as much, it's like playing poker. Like, how much do I want to bet on this? Right? I can bet a little less, and that's what people do. And I think that's what's going on. This is now speculation on my part, but I
Right.
think that's sort of what happens.
for sure. And this is a conference worthy topic in itself, right? There are a couple of questions on online as well on how the industry mindset is for women entrepreneurs by Sidhu. And Precious Anmol says, do you think longevity is question in mind of VC when it is a woman-driven company, etc.? But acknowledging all these questions, there are tons of these questions that will always come. We hope to not just talk to Rohini, but in the coming episodes, even with men who come to the show on this topic. So, in that interest, I want to take this topic and spread it out over a number of episodes. So, but like you said, Idrali, founding team, Atharayala, one of the challenges that come in there, be it a man or a woman, right? It doesn't matter at all. But founding team early, especially getting that founder versus founding team, like a founding engineer, etc., is a hard one. As we get to who are those people, etc., can you shed some light on who is a co-founder versus who becomes part of your founding team itself?
Yeah. Yeah, good question. And yeah, I think I would like to sort of move past the women in entrepreneurship for the
Right.
rest of the topics, and we can come back to it later. Yeah, I think the founding team, clearly it, well, the you need to have, um, in a very early stage company, the biggest superpower of an early stage company has is the ability to be self-sufficient in executing, right? If you can build stuff, right? So, I think you've covered some of these topics in the past. You have, what risks do you have? You've got product risk, you've got market risk, you've got team building or operational risk, and then you have the risk of finding those financial metrics. So there is a progression of risks that you want to mitigate, right? And so one of the powers in the last 10 years, especially, has been the cost of building a company has come down dramatically, right? And there you can put, let's say let's assume it's a SaaS company, tech company, which is the types of things I invest in. And these days I invest a little bit later. I'm investing in more like Series B, but I've invested all the way from seed companies and Series A. Most of my investments at NEA were Series A type companies. And there, the cost of building a company has come down dramatically because of the cloud and because of open source. Like there's lots of ways you can bootstrap a company. So the superpower becomes, who can build a product, right? If you can build a product with your own two hands and you don't have to go hire a team to do that, right? Then you have something interesting there. So you can actually get to a value point without expending a lot of cash, right? So that would be so let's posit that's the metric, right? So the founding team, if you have 2 or 3 co-founders who by yourselves can build an interesting MVP, right? And you should do that. Then you can essentially, um, you know, without spending money on salaries, you go in and you actually build an MVP, and you might even go to an incubator or go through some, startup process, and then you get to a point of value when you can go raise money. So then you're self-sufficient. Now, if you're a non-tech founder and you have a good idea, especially like in India, you have a lot of consumer-oriented or internet-enabled services-oriented ideas where one of the founders may not be a techie, right? But most of these products are tech-oriented. Then you need to have tech people building the product in addition to someone who's figuring out the model. And there, the reason you have a founding team is there you're essentially saying, instead of paying you a full salary, maybe I can give you some equity. And therefore, until I get to that first value point, I can keep the costs down, right? So the founding team becomes somebody who's a non-founder, but who's, usually technical. So those are the types of things I've seen where, when you have co-founders who are extremely technical and they have a decent idea, they work together in some business and they have like this spin-off idea, then they can just go run with it and build the stuff there. Then you don't have a founding team, you just have the founders. They go do the stuff, and usually they're not paying themselves anything or much for those first few years. If you have a non-tech founder, typically then you see a founding team. But I've also seen occasionally, I'll give you an example. In one of my companies, SpringPath, there were 2 co-founders who came out of VMware who built the company. But they had already identified 5 engineers even before they formed the company. They had, and they actually, so it was, this was a company I invested in when I was at NEA. So it was NEA and Sequoia invested in the first round. But even at that point, they had set aside equity, like founder equity, for the first 5 people. So they all got a little bit of founders equity, and then there was an option pool also. But it sort of depends on what you're trying to achieve and how, what that product is.
So let's assume a case where there's say about 3 non-tech co-founders who have an idea they believe in, and they need to now bring in say a tech a tech person to kind of spearhead things. So would you recommend that they bring on that fourth person as a co-founder, a tech co-founder, or as a core member of the founding team and just offer them founders equity without really calling them a co-founder? What's the difference between those two?
I think it could go either way, right? So I would say it depends on how well you know the tech person, let's say the tech person, right? I think if you feel like this person is someone that you will be working with for a long time, and and then and this is really, it comes down to personalities and how much how much your vision for the company matches. Like if it shouldn't be something that is transactional. Just I'm not going to give you a founder status because I need you to write some code for me, right? It has to be more about the vision and overall, like how much are you willing to go to battle with this group of people, and how much are you willing to give to the company. Then you're deserving of co-founder status. But you can separate that from equity. I mean, equity grants actually tend, so there is this exponential decay on equity, right? So the people who join early on should and do get a lot more equity than people who join later on. So if you join as VP of engineering early on in a company's life, right, and I see as high as 2.5% going to a VP of engineering if they come in early, right? If you come in, let's say after Series B and you're coming in as VP of engineering, you might get 0.75%, right? So you essentially have, you can assume that for the same function, you will have lower equity if you come in later in a company's life cycle. But yeah, you could do it either way. Yeah. So I think you could give equity in order to give them some risk mitigation. But the co-founder thing is more about overall what you want for the company.
But
go ahead.
Yeah, but even with the founders' equity, wouldn't you give it to somebody with the expectation that they would go into battles with you, right? And which is kind of the same expectation you would have with a co-founder. Am I missing something there? I mean, just trying to differentiate between hiring an early senior engineering person versus bringing them on as a co-founder instead.
Yeah, I think it's not, I don't see a huge difference, right? People who go into early startups are taking a risk no matter what, right? Especially if they are taking more equity versus cash. At least in my experience, a lot of times people, especially like in Bangalore, when people are getting hired, a lot of them have job offers from big companies, and they get pay packages. And startups, should at least early bootstrap startups won't be able to match a big company pay package. So you need to have commensurate equity going to those early. But you know that there's only 100%, right? So there is so you do need to figure out, like, there is a little bit of a, if I give you the equity, then I don't get to give it to somebody else, or it's coming out out of the founder's pockets.
Right.
So there is a little bit of a dance that happens, because you're not cash rich at that point. You are equity rich, relatively speaking, but still, even the equity is not an unlimited resource, right? And so there again, it comes down to you have to match people's risk appetite. Like if you come in and say, okay, what is the value of this equity today? The value of this equity might not be very high, right? And how highly does this company become a Flipkart? Okay, then this equity is very valuable. But if it doesn't become a Flipkart, it might not be worth anything, right? And so the person who is coming in must see the opportunity the same way you are seeing, and you have to have some way to agree on how valuable this could be for you to converge. Otherwise, you may not be able to converge on it.
Right. So on that point, early on, now shuru ಮಾಡ್ಬೇಕಾದ್ರೆ ಒಂದು ಕಂಪನಿ ಶುರು ಮಾಡ್ಬೇಕಾದ್ರೆ ನಮ್ಗೆ ಐಡಿಯಾ ಇರೋದು ವಾಟ್ ಎವರ್ MVP we trying to build ಅದು ಬಿಟ್ರೆ ಇನ್ನೇನು ಗೊತ್ತಿರಲ್ಲ. So at that stage when we are a 4 people company, how do you value it? One question, how do you value the company? How much is the company worth ಅಂತ ಅನ್ನೋದು, even maybe before seed investment too. ಒಂದು ಆ question. ಇನ್ನೊಂದು, do I say okay ನಾನು ಫೌಂಡಿಂಗ್ ಟೀಮ್ಗೆ 30% ಇಟ್ಟಿರ್ತೀನಿ ಸೈಡ್ ಅಲ್ಲಿ, ಆಮೇಲೆ ಮಿಕ್ಕಿದ್ದನ್ನ ಇನ್ವೆಸ್ಟರ್ಸ್ ಕೊಡ್ತೀನಿ ಆ ತರನೋ, ಅಥವಾ ಫಸ್ಟ್ co-founder 50% ತಗೋ ಅಂತ ಹಂಗ್ ಹೋಗ್ಬೇಕು?
Yeah. I think, I feel like the best startups come out of this burning desire to solve a problem, right? So if you get stuck kind of negotiating these equity percentages and this and that, like you've already lost. Like, I think, so your eye is off the ball, right? And so I think first thing is that, you should, in my opinion, like with these startups, it should be more about, what is this problem that you cannot, like, we all see problems all around us. Not everybody goes and solves them, right? There are very few people who feel like this particular problem you are going and trying to solve is as important to them as it is to you. Very few people, right? And some of it might be because they want to work with you, and some of they say, I don't know about the problem, but I want to work with Vinay. I've known him for 23 years, but I still don't know he can do hot yoga, but
no, that's public now.
He's a Bikram yoga person. No, but what I'm saying is, like, so I think you should start from that point of curiosity and that like burning desire to work on a problem, like and you will be working on it for 6, 8, 10 years, right? And can you tolerate working with this group of people for 6, 8, 10 years, right? Even if nothing came out of it, would you get something out of this journey, right? I think you have to come at it from those qualities first. And then if you figure out that, okay, you're all on the same page in terms of what is important, what you're going to work on, then I think the rest of it will come. So then typically what happens is, before an investor comes into the picture, you will, I guess the founding team, you have 100% of stock is in the hands of the founders. You divide it whichever way is fair, or like what you believe is the right value. And then when the investor comes in, you just get proportionally diluted. Everybody gets, if investor gets 30% or 40% or whatever, everybody gets diluted by that amount of their shares. And typically you do, like, at least in Silicon Valley startups, you do set up at least a 15% option pool right off the bat. The investors will require that. Many times 20. So I used to require 20 at the earliest stages. You might accept 15. So you say 15 to 20% you set aside. So, investors will have this much, and then the founders will divide it according to that. It is hard to change it later on, but.
Right. But a percentage, how do you know what is the valuation of the company, even very early on?
Sorry. Yeah, I just, the light is in my eyes. So I don't think you need to know the valuation of the company, right? It's just, when you first start the company, you just, I don't know about the Indian laws may require you to do some par value and all of that. In the US, you don't need to really, before the investors come in, you don't have to decide on a valuation or anything of that sort. You essentially are allocating based on what you believe is each person's value. If you feel everybody is equal, you just do it equally. I've known companies where there are multiple founders, they're not equal. Some of the companies that I've been in, there are 2 founders, they're not equal. And many companies where it is equal, like the easiest is equal. Like you just say 4 people starting, we just don't know anything better, it's equal. But even in those companies, eventually you might have to figure out, okay, one of them might become CEO, and should the CEO get more equity later on, right? or is the CEO identified right up front? And if this person is the CEO, should they get a CEO equivalent, like a slightly higher equity right up front? And so those things are all dependent on the specifics of who's in the mix.
Got it. Got it. So on that note, I want to take a question from our live audience. Meanwhile, I have to say, go subscribe so that I can take your questions for free, and you don't have to pay me anything. So Pratima Pratima Rao is saying, as founders trying to raise first money for our startup, we are getting advice from investors that we should raise from family and friends, which we are not sure about. Would love your advice.
Yeah. Hi, Pratima. I think, so I do think that a lot of companies do raise from family and friends. I mean, it's a typical way of fundraising. And there are, of course, angel groups as well especially in Silicon Valley. I don't know where Pratima is based, maybe here. And so I would say, going to a seed or a pre-seed group or family of friends, these are all very typical avenues. I would kind of want to find out, why you would be uncomfortable raising from family and friends, right?
Let me tell you my perspective on that. When in the past, when I've tried to raise money from friends and family, again, they were a little too nosy, which is okay. You put your money, you should know how things are going. But it's about people with opinions who might or might not know about this in industry, product, etc. Like I'm willing to listen to you if you have an opinion, but don't arm twist me into doing things your way, especially if I don't agree with you. Right? That's the biggest concern about taking money from friends and family, including. I always have thought of even investors be very cautious about who do you take your money from, right?
Yes. Yeah. No, I think that's right. Go ahead, Mandar.
Just quickly add to what Vinay was saying. There's another element there, which is that most people are probably afraid that their friends and family will not get it, right? They will not get the idea, or they won't believe in it, right? And therefore, maybe the founder will be subjected to ridicule, or basically be bullied. So that could be one of the reasons why entrepreneurs and like Pratima might hesitate.
Yeah. No, I think those are both good points. I would say that with any investor, like, I think, this is obviously a big responsibility you're taking on. They could be doing all these other things with their money, and if you don't feel like they really get the idea, or they get the vision, or they're so if they're not investing in it for the idea that you're working on, then you shouldn't take their money, right? So that is whether they're offering you $2 million or whether they're offering you 25,000. I think you have to have this is the business plan. This is what I'm executing against, and people kind of have to get into that vision. If they don't believe it, they shouldn't invest in it, right? And they shouldn't try to. Of course, tweaking and coachability is all very important, but that is true. I think the other part of Pratima's question, and maybe this is what she's also asking about, is that raising, whether you're trying to raise $50,000, $500,000, or $5 million, or $50 million, it takes about the same amount of time, right? I think the amount of time give me 1 second. Let me just close this thing.
Sure. Maybe another thing is another factor is, Vinay, humans don't come with a factory reset, and friends and family will always come with preconceived notions about what you. Whereas if you go to an investor,
that is true.
Is like investor. That's not.
Yeah, exactly. Yeah.
And the biases that come with it, right? And that's all.
Exactly.
Namava is like neen maado naan duddu kodutini. Don't worry about it.
Yeah, exactly. No, but I would say that, so the question is, with friends and family, it's also a question of, if you spend your time talking to seed investors, you can, I think you can't also be talking to, you can't do a separate friends and family raise. Like you essentially would take the friends and family money with the seed investor. So you need to figure out what the right amount you need to get to that logical milestone for the company, right? So if you need like $1 million to get to that milestone, and your friends and family you think can give you 50,000, right? Then it's great, you appreciate the 50,000 that the friends and family want to give to support you, right? But realistically you need to get that $1 million, otherwise that 50,000 is really at risk, right? Because you can't really execute against it. So I would try to not raise from friends and family if you believe that actually you need something which needs a little bit more capital, and therefore you should be raising from a seed investor. You might as well go there first. It'll take the same amount of time actually, and I think that would be the other reason. But friends and family is, a lot of people here have built companies, that have started with friends and family raises, but it's not right for everybody. And there are lots of sources of capital, especially now. There is seed and pre-seed and micro seed and mango seed and avocado seed. I don't know if you've heard of all these names. There are lots and lots of different seed things
I
that
have heard, and I thought it was a joke, but I didn't know it was a
Wait, I
real.
thought you were kidding about that. You
No,
weren't
there
kidding
are
about
like
mango
these.
seeds.
There are real deals like that.
Yeah, don't ask me all the all the details of it. I don't work in that area, but yeah, those things exist. And in addition, there are accelerators, and there are all these things. And then there is customer money. Like, so you can, if you have an idea which you can actually execute on and take customer money. So there are lots of different ways to bootstrap an idea, and you should be you shouldn't overthink it, but you should think beforehand what's the best way to finance.
That's actually one of our next question, which is, what do you think about crowdfunding, Athara? So there are Indiegogo, Athara. Like, if you are building something for the consumers, you
Yeah.
can go the direction of crowdfunding. Whereas if you're building an enterprise product, there is no point going with crowdfunding.
Exactly. I think your business plan and what you think is the logical next milestone, where you think you can demonstrate value, and you can show you built something unique. Whatever that logical milestone is, you should raise enough funding to get to that point and be able to like budget ahead to that.
Right. And one specific question is about the incubators. I've known incubators who give like somewhere in like 10,000 to 20,000 range, and then they charge you 4% of the company and things like those. That sounds crazy, but at the same time, equity and the numbers mean nothing early on in the life of a company. What's your thought on that?
Um, I think so. Again, I don't work. Um, I don't work in that area, so I can't really give you all of the ins and outs of every early stage thing. So I tend these days I've been working much more at that post product stage, right? So that's my perspective is I'm seeing companies when they already have a product, and I see a product market developing. So that's kind of my bailiwick.
Sure.
So in terms of incubators, they got a really bad rap in the late 90s and early 2000s. And so when YC started, people were very skeptical of incubators. But YC has proven that, they actually have been able to systematize, company formation. And I think the reality is that entrepreneurship is a new form of management. So it is something that you can learn, right? So the big superpower that incubators have is that they teach you how to be an entrepreneur, right? And sort of what you're trying to do, like, you can read a lot of books and self-help and this and that, or you could go through a structured program. And I think the good incubators have figured out how to create enough of that, you learning in the peer network, and then the network access. I think in the conversation with Bibi Jagdish, you were talking about who are the first customers. Like, your first customers matter a lot. And a typical entrepreneur, if in this example of family and friends, if you raise from family and friends, that's your network didn't expand out. Whereas with an incubator, your network is now on steroids, right? Because they open it up. I mean, depending on which incubator you go to, but I go to YC demo days.
Mhm.
And we've invested in companies coming out of YCs, YC, and to the extent there is a little bit of a network effect there. So you go into a good incubator, you will come out of it, with a better idea and a better plan and a better network.
Right.
Now that so no guarantees, of course, right? And so, but they come, to the extent you get all of that, it might be worth it. But if it is sort of yet another, I don't know how many incubators are there in Bangalore and how good they are, but I think the good ones will definitely help
For sure.
entrepreneurs. Maybe what?
Yeah, it's important to evaluate these incubators you work with, because as part of one of the startups I was in, I explored that area, and then the Rodagnalak incubators because they have space to sit out as well and work
Like
out.
JE tuitions, yeah, like JE coaching now. Yeah.
Exactly, exactly. Right. So on that, there is another question by Venki C. He says, how to evaluate the market size. Say, as a person solving a problem in India, I may not be sure of the opportunity of the global scale.
Yeah. No, that's a very good question. And I think, I think India startups, one of the things that has really, in the last 10 years, and this again ties back to the availability of the cloud and the SaaS model and so on, um, is that there are, the market expansion has been dramatic. So you could be, we're seeing all these world-class companies coming out of India, both in enterprise infrastructure. You have Postman, and you have obviously Freshworks and a number of these application layer companies coming out of India, but you also have infrastructure companies starting to come out of India. And it's the first thread you want to pull on is you need to say, I'm building minimum viable product. Like, for whom are you building it? So it used to be that, well, the advice used to be, build it for your local environment, like whatever your local environment is. And almost universally now in India, many of the leading VCs in India will say, no, don't build it for Indian companies. Like, that's not the MVP. You want to pull on a use case thread and build it for the global market. So, so the way you would imagine your market, let's say you are building, um, you have Mindtickle that just came out of it. Like, they do sales enablement. You are trying to at least do a US India kind of a joint market opportunity, probably all US market opportunity, right? And you're trying to attack it with inside sales and so on, later on. But yeah, when you are thinking about the market, you essentially think about the use case based market sizing, not based on geography. So that's a first. And then the second is, what do you believe, if, again, this is the if things go right question, right? So if things go right, like if things go your way, right, what are you changing that dramatically improves in the market? Like, so the classic question on, like, if you are using AI, maybe you can democratize a market which was earlier, if you needed to use people, and that this was maybe I'll be more clear. Let's say you have people have this idea that whatever can be outsourced can be augmented now. Like, so
Mhm.
if you can take a task and you can give it to a human being somewhere else, right? That's a cost arbitrage, right? And that's where a lot of the services companies from India came up, right?
Mhm.
If you can do that, you can probably give it to a machine,
Mhm.
right? So if you are doing an AI opportunity, and you say, I can figure out a part of the market where this was outsourced or there was a workflow developed, and now I can actually improve upon that as a cost structure improvement, and which means that will expand the market. Like, anytime you improve the cost structure, you can expand the market, and then you do a
Mhm.
market sizing on that.
Mhm.
So I think you have to, first of all, just when you're even early on, if you're an Indian startup, in the SaaS enterprise space, kind of be open minded about the rest of the world. But
Mhm.
then think about the use cases and what the technology step functions are and what they're allowing you to explore based on that.
Got it. So on that note, since we have 10 minutes left, crazy how time flies. But
Yeah.
I have to kind of take it to your experience. Although in the future episodes we'll dedicate this about, we'll figure out how the startup scene in India is. But ನೀವೇನಿಯನಲ್ಲಿ ಅದಾದ್ಮೇಲೆ you founded a company in India, but not an Indian company per se. But you did that. How how did you find the startup scene then, and what was your takeaways from that experience?
Yeah, no, I've been investing in India, so even when I was at Intel Capital, we invested in in all around the world. I was doing wireless deals, and so we looked at things like SIFI and so on as potential wireless partners. Sort of like now the Geo deal that has happened.
Right.
We had and Intel Capital had invested in Incable, a number of interesting companies. And then when I was at NEA, I was part of the India Investment Committee, and we had lots of mid-market investments. So NEA did $15 to $50 million growth equity investments. So it was a slightly different part of the market. And we were investors in Kalari's first fund. So Vani's first fund, NEA it used to be called NEA Indo-US Ventures before she spun out and became an independent fund. And so I've kind of seen the Indian market up close from, and then of course Inksedge, so was oriented towards the Indian market. I mean, I think it's matured a lot. Like, of course, in the Indian startup scene has matured a lot, and the biggest issue first of all, people used to worry about the depth of the startup market. There wasn't as much knowledge in the ecosystem, and now you have the knowledge you have in the Indian ecosystem is comparable to what you find in Silicon Valley. I don't think there is that much of a difference. I think the second big one is availability of capital, right? And how much capital is there to invest in these startups. And I think even though we see these huge valuations and so on, I think in India, it's still a fairly it's actually underinvested in. I think there's a lot of money going into a few names, rather than, it's not a broad-based capital allocation. So I think, relatively speaking, Indian companies are undercapitalized, right? And and it actually shows up in how startups operate. So I'll give you one example. In the US, like when you think of a category, right, what you want to do, you bias towards growth, right? You bias towards growth because there'll be other people also coming after the same. As soon as you know that a category is important and it's a live category, you want to grow as fast as possible into that because other people will get funded, right? And in that space. In India, that is true for enterprise companies, as we just spoke about, right? So you can be a world-class company competing that, and you might have a cost advantage and so on. But if you were focused at especially at the Indian market, the Indian market is not as capital competitive, let's just say. So a lot of Indian startups focus on break even. Like they want to get to break even and be kind of cash flow positive, and then start doing other things. So break even is a more important thing in the startup mindset in India, and more so than it should. It's a reflection of the fact that it's actually not fully properly capitalized. Yeah, and then I think the last part of it is that the big themes for Indian startups, at least this is now again for me as an investor, are internet enabled services, which have a heavy physical component, right? And then enterprise startups. So the enterprise startups I feel very good about, like which, the enterprise startups have the global market to access. They have great talent. You just don't, you need to really just focus on the market and the use case, and not necessarily, you're not held back by a bunch of other things. The to the extent you want to, invest in internet enabled services, the rest of society also sort of has to function, right? And like the local contract laws, and whether things get upheld, um, those things are more important. And I think India still has a long way to go. And so I would say, that's relatively outside in. I still have mostly operated as a Silicon Valley investor, but with a good knowledge of India.
Yeah. No,
So, Rohini, what are some problems that you personally would like to see addressed by startups, say in the next 5 years?
In the next 5 years, I think we are living through an amazing, coming out of COVID. I think it's just going to be quite an amazing new world. It's really is going to be a new world. So I like to, so the why now for a lot of startups is that, the world really is a different place. So you have technology that is ready. There are, at least 4 technology waves that are mature, right? So the cloud is mature. Everybody sees AI as mature. Mobile, or getting there. AI is, is maybe infancy still with AI. I agree. Mobile is now in the hands of, smartphones in the hands of 3 billion people, and huge fast networks. Like there's a huge infrastructure rollout happening. Like 5G got pulled in by about 3/4 because of COVID, right? Because they just had to roll out all this infrastructure. And, you were talking about it in a previous episode, I think. 5G actually got pulled in by about 3/4 because of COVID, because they had to deploy something and they pulled that in. So now you just see that there's technology maturity that's happening, right? And everything has changed in terms of what people are going to do with it. So in terms of remote work, in terms of commerce, like so e-commerce and mobile commerce and all of that, in terms of applying AI to health, right? I think, or in terms of health in general, that's a huge area of investment. And then I have a couple of pet areas which are not typically startup ones, and around sustainability, and especially around plastic. Like I have some, for example, I have one of my pet peeves is that food delivery is destroying the planet. Like you cannot have 3 billion people eating from plastic containers for every meal. And so that's a problem that I think tech is creating, which is relatively undercovered and under discussed. I think tech will then have to go solve the problem it creates. But I think we'll come out of this world where this pandemic, seeing that there is a huge set of opportunities. Hopefully, going back to the beginning of this discussion, much more inclusive. Like it also allows you to be more inclusive. It does not matter where you live. Like it matters even less that you are in Bangalore or in India. You can build a world-class startup from anywhere. So I think those types of things, I hope those good things come out of that.
Absolutely. I think that's a lovely thought, that you capped off with. This could actually be a leveler, and maybe finally people will start actually realizing that gender is not risk, or the way a person is born is not a risk. And maybe there will be more and more people who will start solving problems, like you say, in healthcare, in plastic management, maybe in the food and agriculture sector.
Yep.
And it'd be great. So there you go. So people who are watching, there you go. So the bunch of ideas here. And I also, on a semi-light note, I feel very heartened that several times today, Rohini said, in a previous episode, you guys have talked about this, right? Which means that, even Rohini Chakravarthy is watching our episodes, folks. So
so why aren't you watching it? Yeah. Yeah, please right. Subscribe, watch. Yeah, like I want to hear the backstory between Kittak Purthivi. films. Like, yes, I want to India.
You know, that was going to be my wrap-up question to you,
Huh.
Italy, but I'll tell you since you already asked. Yes, go ahead and subscribe because Rohini said so. There you go. So,
You can pay me later. Yeah.
but yeah, exactly. Equity. Rohini has equity in Kitak now. So, but you think yeah, Kitak was very simple. Like weekend al jana ಏನೇನೋ ಮಾಡ್ತಿದ್ದು. Yeah, like constantly there were some of the other projects, engineering and non-engineering. So it was common between friends to say, so e weekend ಏನ್ ಕಿತ್ತಾಕ್ತಿದ್ಯಪ್ಪ ಅಂತ. So and we make a lot of short films as well. So ಅದಕ್ಕೋಸ್ಕರ as a matter of fact ಈ ಸತಿ ಪೇ ಬಯಾಸ್ ಬಗ್ಗೆ ಈ ವೀಕ್ ನಮ್ದೊಂದು ಶಾರ್ಟ್ ಫಿಲ್ಮ್ ಬರ್ತಾ ಇದೆ between men and women. So it's a 3.5 minute film and etc. So check it out. But yeah, that's how Kitak started. So we started doing comedy, fiction, non-fiction, ಎಲ್ಲದ್ರಲ್ಲೂ. And then we realized we just want to sit and chat for so many times. So we have podcasts like Cine Samvada where we talk movies. I mean, Shitty Samvada where we talk all things crappy. It's random conversations. And then of course one of the things that we are deeply involved in, like working, is something. I mean, like digital content al nodidaga we saw that there is there is no ecosystem like this for Kannada entrepreneurs. Not phonetic Kannada, we're not going there, but the Kannada we spoke in this episode today, right? So so that's how Kitak started, and yeah, lots of audio, video, theater, and Bay Area we do theater.
There's one more little story here, right? So back when we were kids, I'm not going to give away how old we are when I don't worry. Okay, so
I'm 38, so I'm okay.
we used to take ourselves so seriously that, so when I was just 1 year behind me in academics, right? 1 year my junior. So I had just finished my 12th standard, and so when he entered his 12th standard, he came to me and said, "You have to set question papers for me every week in physics." And guess what? I used to do it. I used to do it very seriously. I used to draw up question papers for him and a friend of his who used to come to my home. And then there used to be a proper exam environment. And you should have seen his attitude when he came in for those mock tests. He used to come in with this vibe of, "Yuvat kitak purtina." So it is no surprise that he named the platform Kitak.
Very good job. Awesome.
So on that note, Rohini, I want to know.
Between you and I, Rohini, I think we have given away far too much about Vinay today.
Exactly.
No, all good, all good. But I do want to know, Rohini, what happens in your free time outside of work?
Oh, that's the next episode, right? Well, outside of work, I'm quite involved with. Well, first of all, family. Like lots of. So I have 2 boys. One of them is in college. The other one's in high school, senior. So he's finishing high school. My husband Arvind, we were classmates at IIT, and actually at Vijaya High School right. So and we've lots of friends here. So in before COVID, it used to be a lot of social stuff. ಈ ವೀಕೆಂಡ್ ಕಿತ್ತಾಕ್ ಬಿಡ್ತಾ ಇದ್ವಿ. ಇವಾಗ ಸ್ವಲ್ಪ ಎಲ್ಲ ಎವ್ರಿಥಿಂಗ್ ಇಸ್ ಆನ್ Zoom. I'm also on the board of the IIT Madras Foundation. I'm very involved with MIT. I taught a class actually last 2 weeks ago. So I do a fair amount of things. Then, parents and families in Bangalore. So I talk to them every day actually now. So there's a lot of that. And then hobbies wise, I sing. So if you next episode you can play Antakshari with me on Kannada songs, and I can guarantee you I will win.
We'll
by
see.
a lot.
By a lot.
Like
yeah. No, but we'll see about that.
See about he's taking up the challenge.
Now you know what I mean. Now you know what I mean about their attitude.
Exactly. No, madam.
But hey, guys, we're over time. But thank you so much. This is such a great episode and a fun one too. So we've always wanted to do this the casual way and not Namaskara Rohini. That is never going to happen in Kitak. So but thank you so much for making this happen. And guys watching, I hope you all liked it. Do share and subscribe to the channel.
Thank you, Rohini, and thank you, folks, for this